Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
Good morning, everyone, to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the guy we named the show after, AJ Brown. Good morning.
Hey, Sip, what's been going on there?
Happy 4, and I was looking at the calendar today, 4/22/2022. Yeah?
4/22, 2022. That's kind of cool. Repeating patterns. Is it tradable?
So my first question is it an important options day?
No, it's not. I mean, their weekly options are expiring, but our main options for April expired last Friday. So a lot of folks who are selling premium are thinking about May 20, which just happens to be my birthday this year. It's my birthday every year, but options expiring on my birthday is pretty cool. But yeah, not too much going on except for opportunities to get into positions.
Yeah, and before the show, we were just chatting that it's been kind of a boring week,
I
and
mean, this was a perfect week for me to head to our beach house. I mean, I've just been playing a lot because there hasn't been much going on, but there has been some movements in the trends, right?
yeah, trending downwards, I believe.
It's and let's see. Jerome Powell spoke a little bit yesterday, but it was a pre-recorded speech that he gave, and there was nothing new. So I think people are feeling kind of of inflation, feeling the weight of Fed hike, feeling the weight of removing the quantitative easing, even undoing a bit of it. You know, we've talked about it on past shows that the Fed's actually been hinting that they'd like to, in the next 3 or 4 years, take about $4.5 trillion off of their books. That means basically, the money they created is they want to just kind of sop that up. And the ETFs that are around bond and inflation have been going up. So you and I have been talking about how, they basically deflated the value of bonds for quite a while, meaning that people have turned their vision and they've been like looking at stocks as, instead of the more riskier investment, actually the safer investment. And then the more riskier investments have been these new things like SPACs and REITs and crypto and all of this kind of stuff like that. It looks like the focus is moving back to where, stocks and equities and things like that might be now considered the more risky investment, and bonds are coming back into vogue. So we're going to have to keep our eye on that, because what's going to happen to all those other investments like crypto and even housing investments? Is the housing bubble going to shrink? Is it going to pop? Got to keep our eye on it for 2022, 2023.
Sure. And we've actually got a special guest on the show today.
That's
who
right.
I would love to get some of the feedback on this general market analysis. And so rather than hearing me, comment on these things, let's bring in another expert, because next week you guys are both going to be doing some cross webinars. He's going to be coming into your classroom. You're going to be going into his classroom.
That's
and
right.
we thought it'd be a good idea to bring him onto the show, get some insight, because he does take a technical, purely stock trade. Well, maybe not just stocks, but he doesn't use options as often. And we've worked with Paul in the past with his program, with analyzing stocks and implementing options. So without further ado, let's go ahead and bring in Stephen Cawiezell with the Trader's Plan. Stephen, thank you for joining us today. Jumping right into the commentary from AJ, what are you seeing this week? How's it affecting the stocks? What are your thoughts?
Yeah, and I appreciate it. And hello, everybody. Stephen Cawiezell here. I always try to. There's a lot going on. There's a lot of news. There's a lot to digest. And because I take a technical approach, I try not to always make trading decisions just off the news, like really let it show up on the chart first. And, really this week, I went from a few weeks ago, the glass half full, right? We're in this giant trading range, to this week, the glass is really half empty. And, a couple of days ago, the S&P 500 tried to break above the 200-day moving average and got rejected and sold off yesterday. It's further selling off today, which means we're probably going to retest the lows of February. So that's really just what I'm expecting right now. And it seems, when I look at a chart to say what's reasonable, when you have the rejection and then you have a potential downside target in the S&P 500 at the February lows, I think that makes a lot of sense right now. And then who knows, if it's going to break through or if it's going to bounce around for a while. But really, we're in one giant trading range right now with a tilt to the lower, and, trading range, that's really no man's land.
Yeah.
So AJ just pulled up the S&P, and we like to reference the S&P real quick, and that's spot on to what you were just saying.
Yeah, I just wanted to pull this up a little bit because Stephen was pointing at the 200-day simple moving average, which of course is this line right here. And he said, we tried to get and we didn't do it. I've also got the 50 over here. That's this little pink line. So we've now dipped also below the 50. We also had that death cross on the S&P 500 just about a month ago, a little month and a half ago. So yeah, we tried to do that rally, and I actually drew that we had more than a 100% retracement over our previous one. And we were actually thinking that this could be, an ideal pullback. And instead of giving us a pullback, it's actually going for, a double bottom. And we're watching the lows, like Steven said, at 41.70 to see if that's going to be able to hold out. If not, we better get our bear, view on. By the way, Steven, I just love that, man. The reason why Steven's on our show and why Steven and I are going to be doing stuff next week, like sharing our stuff, is because Steven's very rules-based, right? And if anybody's been part of my program, you know the rules that I put, and it's very rules-based. You're not like speculating or guessing or listening to the talking heads. And so, how's that working for you, Stephen, right now with all the, keeping to your rules? Are you having to do anything different, or are your rules holding out?
No, we've actually had a phenomenal year. We're riding quite a win streak right now. I think we've won 8 in a row. That doesn't mean the next 8 in a row will win, but no, and the rules are good because, like you said, there's so much to digest out there. Like you listed everything, and instead of trying to make sense of it, you get a signal, you follow the rules. If it works out, it works out. If it doesn't, it doesn't. But it's really, a lot less stressful when you do that. So I've had a phenomenal year, honestly, so far with multiple systems. Energy has been good to us. And it's always interesting. And why I love rules so much is you never know which trade is going to be the one that really makes your quarter or your month or your year. You don't have to know, right? You just follow the rules, let the trade do what it's going to do. And then you have something like energy, which is absolutely taken off over the last several months when everything else is getting hit pretty good. So rules have been good to me. They usually are. And they also keep me sane as well.
Well, and that's why you're called the trader's plan. It's all about,
Absolutely.
Planning out what your trade is going to be and then trading that plan. And the scoop also, folks, is Steven's not only, I've looked over his shoulder. He's not only all about the rules for entries, he's about the rules for exits. And that's what makes sure that, if it's not going your way, you get out. It's all about cutting your losers and letting your winners run, right, Steve?
I absolutely, and honestly, I would say the rules for exit is more important to not have a bias in it, right? The worst thing I can say to myself is, "Oh, this stock can't go any higher," and then it goes on to triple from there. I've made that mistake before. Or the worst thing somebody can say to yourself is, "Oh, it's going to come back," right? These are really catastrophic mistakes. So really just having those rules on that exit is probably more important than the rules on your entry, but they are all part of one big plan that you have to execute, and you have to stick to it. And I know that's
Yeah.
not easy, right? Because we're getting tugged at both ends, but it's part of the process.
And so what's also good about this is, his rules work on all sorts of investment vehicles, and then you can use those investment vehicles, and if they're optionable, dude, you can apply some options to some of those trades and incorporate some leverage, incorporate some premium selling, offset costs. We could do all sorts of magic together.
Absolutely. I have a lot of the people that I work with, they trade options just as much. So they like to take the alerts or take the system, add a little option sizzle to it, and then you got something.
Yeah. So I just want to for our viewers here, I want to turn back to the S&P 500. Everybody knows that I like the S&P 500. I always think about, like, for instance, we hear about the talking heads talking about the Dow Jones all the time. I consider that like royalty, like the king or the queen, but the actual prime minister of the markets is the S&P 500, and that's where I get a lot of my broad market thoughts about it. And so I wanted to focus one more time, and you can give me any sort of insights you have about the kind of your broad market thoughts, but folks, I always outline based on whatever the previous retracement from a low close to a high close, where we're going. It kind of gives me kind of a litmus and an ideal pullback and an ideal kind of contraction of an uptrend would have had us between these two levels. And you can see as of today, we're dipping down. Now, so long as we don't dip down below that level that Stephen was talking about, we could still kind of recover this uptrend. So this is considered, to me, we're now in kind of a weak uptrend zone. If we get below those lows from February, man, I'm thinking more of, hey, we're resuming the downtrend. So I'm actually watching along here. And if I'm thinking about positions, I'm either going to be trading a little bit on the nimble side, again, emphasizing exits over entries, or even more, I could be thinking about my premium selling, which works on kind of sideways indecisive markets. So that's kind of my thoughts. Any kind of additional feedback? I know you mentioned trading below the 200. Is there anything else you're looking for? Is there any other kind of indices or charts that I could pull up or that you want to pull up to kind of talk about the broad market, or should we move on?
Yeah, no, we can stay on this for a second because I can make the bullish case and I can make the bearish case. I think in the very short term, you probably have to make the bearish case the next week or two, see how this plays out. I think some of your put strategies would probably work out really well right here. But I can also look at this and make the bullish case, because if you draw a neckline, it looks like an inverse head and shoulders pattern. If it doesn't fall too far. You got the shoulder on the left side back in, when was that? January. And then you got the February head. And then you got a shoulder that's being built right here where we're at right now. So if this flips and goes the other way, I would definitely make the bullish case. And one more thing I'd like to add is the market can go up even though there's an abundance of negative news out there. So just be willing to pivot, take it day by day. Don't have a too strong of opinion, because if the chart's telling you it's going to go up, you need to switch.
Follow your rules.
Follow the rules.
Don't update. One of the things, and I work with some of these clients, and one of my clients just totally likes to change his rules mid trade. And I'm like, you planned this out. You totally thought this out in advance. And now you're in it and you're letting your emotions pull you. Stick to what you put down in your plan.
And it's hard sometimes. And when I tell people, I was like, look, you build a trade plan, stick with that no matter what for 20 trades. The goal is just to see if you can stick to the rules, and then you can make slight adjustments from there. But if you can't stick through it for 20 trades, you're going to be chasing your tail.
Let me ask you one more question about the trader's plan. So one of the things that we emphasize here is planning, making your initial plan around the worst case scenario. In other words, understanding what your max risk is going to be, planning accordingly so that, and if you hit that, worst case scenario, you really want to emphasize worst case scenario. And that way you're planning for the worst and it can only go better than there. Is that kind of what you guys do over at the Trader's Plan?
100%. I think you're preaching to the choir. I did a workshop earlier this week to some of my students, and I emphasize your risk is the most important thing. with a trade plan, you really have three pillars. You got the pattern, you got the trade management rules, and then you got the risk management rules. That pillar three, that risk management, is the most important thing. So every trade you take, you need to, I believe, treat all trades the same, means risk the same amount. That way you don't inject bias, but it needs to be, 1-2% of your portfolio. That way, if you're trading, you're risking 1% of your portfolio per trade and you lose 10 in a row, you're only down 10%. Now, I'm not saying that's going to happen, but like you said, plan for the worst case scenario. So it's always living to invest another day, because
Absolutely.
the risk is the only thing we can control. We can't control what a stock's going to do on the upside or the downside. We can't control how much we make, but we can control how much we lose when it doesn't work out.
And I've been telling my folks for forever that you can tell the difference between a newbie trader or a newbie investor and somebody who's been successful for years based on that one question: do you plan your trades around risk or reward? So
Absolutely.
I'm glad. Now, maybe we should, one thing that did happen, and Sip, I think that you were on this, the mask mandate got struck down in the courts, and like almost immediately a whole bunch of folks started removing their masks even mid-flight on some of these airlines.
Yeah, and all the transportation companies popped, which is something that we've basically covered a few times. I know you're a fan of JetBlue, but today I think we're going to do a little analysis on Delta Airlines.
Yeah, now before we do that, do we want to take a break?
Yeah, let's take a little break and play the commercials to remind AJ of how lovely the California West Coast is.
Let's do it. I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you, along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
And once again, that's AJ's daily workshop, options trading workshop. Anyone that's over from Steven's group, feel free to hit the link in the chat. Also, if you're watching on YouTube, Twitter, what else we got? Facebook, hit the like, subscribe button.
Don't forget Spotify.
We've got the weekly show every Friday, and hopefully our guest list can get just as elaborate as our man Steven here breaking it down for us. So how do we want to go about digging into Delta? Who wants to take the reins first? I think we should pass it over on, or go ahead. What do you got?
No, I was just going to say we featured Delta a couple times over the life of this show. And I'd love to get Steven's thoughts about what's going on with Delta Airlines, because we've been trading it mainly as premium trading, selling premium against this, because it's kind of been in a sideways channel. Now, are you sharing your screen on Delta Airlines as well, Steven?
Yes, I can.
All right, so we'll switch over to Steven. Give us your thoughts. How are you looking at this?
I'm really looking at it from a longer term view, and this is the daily chart. You have a pretty ugly down channel. Whoops, that didn't. Let me kind of clean that. And then you have a breakout. It's just not where. There you go. So I'm looking at this from a couple angles. Like you said, the mask mandate got killed. A lot of stocks started popping. But in addition, Delta also reported earnings last week with an earnings beat, and there's a lot of good looking volume in here. Now, so what I'm looking at this is you have a breakout. You have a breakout of this long downtrend that goes back 12 months. So I would say that's a legit breakout, and it's breaking above these key pivots right here. The market pressure could pull it back into this zone, but I think that's a good zone to look at, right? Kind of pull back and test the trend line, because you don't want to buy the initial breakout. You want to buy the retest. And I think the market pressure could pull it back in. So when the market's coming under pressure, I always say, what is bucking the trend? That's the first question I ask myself. The market's down, what's up? Delta has absolutely bucked the trend. It has an earnings beat. It has a 12-month breakout. there's a lot of stuff to like here. So, I mean, that's where I'm coming from. And I like long-term breakouts, and I especially like breakouts on earnings, in a challenging environment. It's just, it seems to be setting up pretty nicely.
Yeah. Nicely for what kind of trade? What are you thinking? So,
Yes.
shorting it, going long?
I probably in the very short term, like if you want to play like a 1 week option, right? We'll just talk options. You could probably, sell a put or buy a put because it's likely to retest this 42 to 40 zone. But if it gets back into this 42-40 zone, and it's okay if it pulls under the trend line a little bit, but you got that 200-day moving average right there. So if it pulls back right there, I would expect it to find supports in as long as the market just isn't really getting hit hard. I think that's a good place to just buy.
Right on. So I would agree. In fact, probably sort of lagging indicator per se that would tell us whether or not it's finding a top or whether to go through. So let's not shoot until we see the right whites of their eyes. It is moving up, it's breaking higher, but yeah, there's this level right here. And so we should be thinking of different ways to play that. So not currently in Delta, and what's nice about Delta as well is its price point and its liquidity in the option chain. So there's a lot of liquidity in the option chain. You don't have to worry about, am I going to be stuck being the only buyer or seller when I really need to, make a trade on this? So that's a kind of a pro on Delta. And then also it's affordable. So if you want to leverage this, I mean, you could totally short the stock or go long the stock, depending on, again, this level at about $44 and, whether or not we want to look for some sort of confirming indicator, whether it's going to go down or up. But you could also leverage a deep in the money call or put. And I'd probably go a little bit far out in time, because if you come down, for instance, if we go ahead and short this position with a deep in the money put, the scoop is that if it stays within, say, for instance, coming down and staying within $32 or higher range, then instead of just selling that put, why don't we then instead sell a front month put? Sell something that's going to give us some time decay on it, maybe a near term at the money, maybe erroring to the side of out of the money put. And we could also protect ourselves if we're going to go against our initial covering position. We could buy a protective option, an out of the money option that'll profit both on the retracement, but also it'll protect us should we then go against our initial position. So I kind of see that 1, 2, 3 punch with Delta. I mean, yeah, I think that there's a lot of potential here. I'd love to know, what kind of signals do you use, Stephen, to give you, the idea of whether it's going to go up or down?
I like to look at a volume a lot, right? And
Okay.
that kind of gives me an indicator of like, okay, you have a breakout of a long-term downtrend. You have an earnings gap. Is there the buying pressure that's matching that? And right now it is. So if it breaks that if it breaks out on above average volume, which it has, so now I'm looking for a low volume pullback. Okay.
Yeah.
So if it pulls back to low volume around the $40 range, which is also a pivot from a previous breakout, I think that looks good to me. So when I'm playing with volume, I'm up volume, lots of volume, and then I like to see quiet on the pullback. And I think right now, with just the way the market's at, you also want to make sure the market is just not in free fall mode,
Mm-hmm.
right? But if the market pulls back for a few days or even a couple weeks, that could give that Delta opportunity to pull back to 40.
There's totally a lot of correlation, right? And I've seen that over my years as ETFs have become more and more popular. It doesn't matter whether Delta is doing better than United Airlines. If everybody is buying and selling the broad market, or even buying and selling transportation, then they're all going to go the way of the market. So like we always say, folks, the broad market and even the sectors, that's the tide. And you have to take in consideration of what the tide is doing, because your underlying symbol is going to float on that tide. So if the tide's dropping, even if that underlying symbol is doing some moves, it's going to drop with the tide, right?
Absolutely.
Hey AJ, we've got a live question that I think it would be fabulous to get both of your guys' perspective. I'm going to go ahead and put it onto the screen.
Okay.
But Tavanda is asking, how do you know when a stock or a trade is actively or is active or a passive pattern? How do you know when to pull a stock ETF or option out and reinvest the same stock back? Which I think there's a variety of strategies there.
Yeah, I'm going to let Steven take this one first, and then I'll put my 2 cents after. Go, Steve. And
Yeah. So, regarding the active and passive pattern, to me, they're all active, right? And that's kind of the way you have to look at it. But I kind of got to go back to the volume quiet. Like, I'm looking at the last 60 days. And as long as that is continuing to be in the right direction, right, there's an imbalance of above average volume. I mean, I'm just going to continue to play and trade that. So I don't really look at it as passive or active. I like to put the trade on and then set my targets and then let it do its thing. But it's just kind of the way I look at it. Might not
I
be the
like
best
that.
answer.
And I like that you keep saying volume, because for me, volume is the great validator.
Absolutely.
Volume will totally tell you whether what you just saw in price is real or if it's fleeting, So volume is the great validator, accumulation, distribution. That's where it's all at. My thoughts about active versus passive pattern. Like I agree with Steven. I think great minds think alike here. Active patterns, especially with options. I mean, options make money whether the market goes up, down, sideways. They also make money on time passing by, and even something that a lot of traders, more expert traders, do. They make money when there's an increase in fear in the market or an increase in confidence in the market. So options, there's like 26 different ways to trade these suckers. And so you can find the pattern. It's not just a pattern in price to be able to trade options. I mean, some people would look at Delta and say, hey, man, it's not appreciating. They only know how to trade it if it's going, buy low, sell high. They only know how to do that. But I look at it and I'm like, hey, man, I could do a once a month. I'm not talking about day trading. I'm talking about trading like once or twice a month. And I can create an income through options on this thing. The only time I think I take something out of my list is if it becomes not tradable. So I don't like things that gap overnight, right, by large amounts, because gapping, the options market isn't open 24/7 and doesn't even have the after hours. So gapping is kind of something that, if you're an options trader, it can be nerve wracking, because your option price could change in the first 5 seconds of the market opening based on what's doing after hours. So I actually ask myself, not active versus passive, but more of, does the underlying, is the underlying symbol and the other patterns that I'm looking at, are they no longer predictable, or are they no longer tradable? Because, you guys know that I am sometimes, I like to coin myself as the most disciplined options trader, but I know folks behind my back call me the most laziest option trader. I think of myself as the most efficient option trader. That's because I don't like to force things. I like things to be super easy, because I've got stuff way better to do during the day than sit here watching the computer screen. When I left my day job back in 2004, I didn't want to replace that with yet another job. And so I look for stuff that's easy. And so when the symbol is no longer easy to trade or predictable to trade, that's what tells me to get it out of there. Thoughts?
Yeah, I think I loved what you said, easy, right? And I think it's important, and that's the way I look at it too. I don't want to stare at a computer screen all day, but from everybody that's listening, one reason we like it easy for ourselves, but we like it easy for you too, because if it's easy, then you can replicate it. So easy, replicatable, not overly
Yeah.
complicated, and that helps you guys out too. So it's just, I don't believe that you can just stack a ton of stuff on a chart and that's going to make you a better trader. I believe it's all about, price and volume and rules. That doesn't mean I don't use indicators, but start with easy, start with simple, put some rules in place. If you can follow those rules, you can slowly add some things on. I agree.
Yeah, it's totally true. I always get questions, especially from my program participants, and they get subscribed. And I don't know if this happens with you, Stephen, but they get subscribed to a symbol. It's like they spent a lot of time analyzing it. One of the symbols that I got just this week was CSTM, and I'm going to feature it real quick just because they looked at it and they said, hey, this looks like such a nice pattern to trade. And then she went on to say, but I back tested it and I tried to test it in a paper trading account. I forward tested it and it just was really difficult to trade. What new indicator should I use in order to get the signals better? And my answer was, what you're finding out because you've gone through this 3 or 4 times is that this symbol isn't easy to trade. Move on. There's thousands of other symbols out there that could give you like the simplest signal that, maybe it's a moving average crossing or something very straightforward that says, buy me now, sell premium on me now, whatever the transaction is. And it's like irrefutable versus some of these ones that have confusing signals or crazy true ranges that are very difficult to map during the day. Just let it go.
Yeah, and I'd like to add to that in a different way of thinking. Instead of like focusing on trading one symbol, maybe focus on trading one pattern, one
Yeah.
setup, because you have, 10,000 stocks to trade. Like, master one pattern and the opportunities are abundant,
Mhm.
right? Instead of just trying to force it. Like AJ said, you don't want to force it, but if you master one pattern, you're going to be probably a lot better off than, focusing on one symbol that's not working out at that specific time.
And notice Steven said pattern, right? And that's fine, right? Whether it's a price pattern, like you look for a trade pattern, or you look for a trend following pattern, or if you're selling premium, you look for sideways channel. If you're looking for breakouts, consolidation. In options, you might be looking for a pattern in how they decay in time. You might be looking for a pattern in implied volatility changes. Those are patterns. What you don't want to do, especially with options, is get stuck with a trading strategy, right? In other words, all I can trade is a certain tool. Like in the stock world, you might be like, all I want to do is go long stocks, or all I want to do is short stocks, right? That's a tool that you apply to a pattern. Because I've had folks who have come to me, when I used to do live speakings, and they'd come to me like at a break, and they'd say, "Hey, man, I took this like short course on how to do vertical spreads, which is again just a tool in the tool chest." And they're like, man. And so, I've been doing vertical spreads every month, and I've been making even double digit, like 10 or 11% on my trades every month. It's been super easy. But then something happened at month 10 where not only did I give back all my gains for the first 9 months, I gave back half of my portfolio. And the first thing that goes through my mind is, you don't have risk management down, because there's no way if you were trading my strategies that you'd lose half of your portfolio in 1 month. But then the other thing I'm thinking of is, you pay attention to the patterns. You've been applying a tool and the patterns changed on you, and you didn't know how to pivot, how to trade the new pattern, or how to pull yourself out when the pattern changed, right? So that's something that was a nuance, but I agree 100% with Steven. It's about, adding patterns to your repertoire one at a time, master one and then move on to another if you want, or you could definitely find one. And I've had folks who have traded the same pattern, for their whole life. But then don't get that confused with the trading tools you use to trade those patterns, right? Do you agree with that?
Yeah, absolutely. And it makes me want to talk about market type. Like, not every pattern works in every market type, long, short, sideways. So you want tools for each market type, and you have to have really rules for being able to identify, hey, maybe the market type has changed. Now we're in a long volatile sideways, so then you change the pattern and you change your tools, right? Maybe you go to income trading or something like that. So you just have to be aware, right? And I think people get fixated on one system or even two systems, but they also think it's supposed to work all the time. And wouldn't that be easy for all of us? And unfortunately, that's not reality.
If it was that easy, if it was so easy to learn a system in a short course and be just filthy rich because of it, don't you think everybody would be doing it and there wouldn't be such a high washout rate for, people who decide to dabble in investments and trading?
It'd be too easy, and it's not realistic. You got to put the work in. You got to be willing to look at it from a larger point of view than just focused on one system, one rules, one pattern, one strategy.
Absolutely. Sip,
Hey,
do we have
AJ.
any? Would you want to stay on, Stephen? And we always get a couple of tickers
Yeah,
from
absolutely.
our users. Maybe you'll give some insights. What do we got, Sip?
Well, that's what I was going to say. I was just going to let anybody know that's watching for the first time, tuning in, that feel free to drop any ideas, questions into the chat. And if we have time, we'll run through them. I believe you had one this week that has an interesting setup. It's a company I've never heard of, ticker symbol DAR.
Yeah. Do you have a chart on DR, Stephen, or should I just share? Okay. Let's have Stephen give us his thoughts on DAR first, and then I'll throw mine in.
So, we talked and I like this, and I've said before, I do like positive earnings. So you can see with this, like it is in a consolidation. The market's kind of been selling off. It's been rough, but this stock was at an all-time high, or at least a 52-week high yesterday. And even though it's kind of in a choppy, grinding itself higher, it is in a rising channel. And if you look down here, this whole right side, like this breakout right here, happened on an earnings report. So you got the volume that's stepping in, more accumulation than distribution. It's starting to get pretty quiet as of recently, even though the market's really been rough for a few weeks. I see that as a positive. So, I think this is definitely one you want to have on your watch list. If I were to say, hey, where would I consider getting in? It'd probably be at the bottom of this channel, right there. So you want to kind of wait till it comes down into this zone right here, which is probably see that orange line, the 50-day moving average. See if it can give that moving average a nice little kiss. And if it can give it a kiss and show some support, I think that's a good setup.
Yeah. And so you're thinking that's a good setup for going long the symbol.
I think that's a setup going along with the symbol. I'm going to disclose, but I think if it crashes through and breaks this 200-day moving average, the trade is over. Like that's where your risk is. So, but you have, I think, more upside. And right now, I honestly think the biggest risk is just the overall market, because the market's coming under pressure. Most stocks are going to go down with it. So, but that if we get a few more days of pressure, that could get a nice setup. If the market settles down and the stock finds support, I'm probably going long with a stop, around 72.
Yeah. Yeah, I like it. Listen, I'm looking at it very, very similarly. I'm looking at it that we've had a nice kind of range expansion moves in this upward direction, range contraction moves, expansion, contraction, expansion, contraction. If you have three of those moves, that, of one move begins at the end of one move begins the start of another move, and so on and so forth. Three of those moves, you get 4 points. You get 2 tests of support, you get 2 tests of resistance, and that's what creates a mature trading channel. So my first thought on this is that this is a very similar to what Stephen said. This definitely is a trending position. It's got a nice uptrend to it. We do, like Stephen pointed out, have some overhead resistance. So we'll want to watch that. That was established, back in October of 2021. But, it's pulling back. It's in a range contraction phase. And I agree 100% with Steven. Let's let this pull back and find where, find out if this level of support in the 200-day. I'm just using this where we've tested a couple of points on the ascending line of support. See if that holds out. And if it does and it starts to reverse, I like this fast D indicator. It's a lagging indicator. It's nothing big. It's the 619.3. If I see a nice crossing there of the fast MACD like we did a couple of weeks ago, I would be interested in perhaps trading that as a trend follower. And so I would use an option strategy that would basically take advantage of that directional move, a single leg call option. And there's all sorts of different ways to play that. You could go, deep in the money, have an option that behaves just like the stock dollar for dollar, but instead be at a lower price. Or you could even get more elegant like that and trade something at or out of the money and take advantage of some of the benefits of doing that. But there's all sorts of ways you could trade this directionally, and that's what I would do. And I would further add that since Darling is moving a little bit, the contraction phase aren't, well, this one is, the bear jumped out the window in like a couple days there. For the most part, they seem to move nice and smooth. And so if you do get into this position long, you might consider, instead of just selling when it hits resistance or selling when it hits a top, you could also, instead do some premium selling. Do some premium selling, buy some protective options, let that premium selling expire time, roll out your protective option. It could be another source of economics on this position as you play the medium to long term move up this ascending channel. But again, I agree with Steven. Let's watch that overhead level of resistance. Let's see if that reversal happens. We don't want to jump into this position on any sort of speculation. We want to wait until some sort of volume validation, some sort of lagging indicator says, yes, it has found a bottom reversal and it is heading back up. Yeah.
Yeah, I think right now when you're looking to go long on anything with the market doing what it's doing, I think you want to take the conservative entry approach. Right? It's okay to get a little bit of extra validation right now because, a lot of people, especially, I'm a bull, right? You're a bull, bear, and sideways guy. So when you recognize that it's maybe not the best environment to just be buying longs all the time, you want to look at your risk and say, okay, to decrease my risk, should I just maybe trade less or maybe add one extra validation point to make sure that it's there?
Yeah, I would agree. I would agree that right now the market is somewhat schizophrenic, especially in the last 3 days, as to
Yep.
what it wants to do. And so, and emphasizing what you said in the beginning, I think also getting into the trade is going to be the easy part. We want to be very nimble and very, if we get any hint of an exit signal or, the next step in an options trading position, we want to take it and be conservative with that versus, having any sort of hope that this might, pass. You know what I mean?
Yeah, I think you enter any trade, whether it's options or stocks, you better know where you're getting out. You better have that game plan before you hit that buy button. That way, there
Yeah.
is no decision making in the heat of the battle. Because in the heat
I
of the
agree.
battle, we get emotional, we get excited. There's all these things tugging on us. So just say, okay, this is where I'm getting out. If it doesn't work out, this is where I'm getting out. If it does work out, I can't change it. The goal is to follow the rules.
Yeah. Let me ask you this. When it comes to, the plans that you teach, again, I teach folks to really plan for the worst.
Mm-hmm.
And then very rarely, like I really emphasize the worst. And I don't expect my folks to actually hit the worst, except for in the most, extreme situation. And so what I always tell them is if you get bailed out of your position at the worst case 3 times in a row, I call it the hat trick rule, man, you need to go back to just using using a paper trading account, a simulator, and practice and get your experience on, because you're planning. It's not the markets, it's your plan, it's you, right? And again, with our risk management, if you're only risking 2% of your portfolio, you get to about a 6% loss. Stop what you're doing, because obviously, insanity is doing the same thing over and over and expecting different results. It's not the markets, it's how you're planning out your entries and exits, and in my case, option selection. Do you have something similar? Do you ever have a place where you're like, stop trading? You need to go back to the basics.
Yeah, absolutely. So yeah, the market has a way of frustrating us all, right?
Yeah.
It's going to do that. Trading is more frustration management than anything. If you can figure that out, you'll do just fine. So I definitely have rules. Most of my rules are around different market types. So if the market environment is a certain way, we either stop trading for a little bit, or we take half position sizes. So that's really my risk management, as far as how when something's not working out. And because I have several rules-based systems, usually if one is underperforming, the other one will. So I'm more focused on the overall market as a way to decrease your risk, because we're trend followers, we're swing traders, right? So that's really the way I look at it.
I love it. What do we got next, Sip?
Well, I feel like we're running a little short on time. And so what I would encourage everyone who's watching and has questions to do is to keep an eye out on both of your guys' upcoming webinars. So we've got one coming up on Tuesday with Steven's crew, Tuesday, April 26th at 1 p.m.
So
Eastern.
I'm going to be coming and talking to Steven's crew on Tuesday. That's awesome.
So we'll get more insight into Steven's strategies, accompanied with your insights. And then that following Thursday, April 28th, a night session, 9 p.m. Eastern, Steven will be coming into your group to kind of give his analysis. So with that being said, I feel like if there are any more questions that people have, feel free to drop them into the chat. We'll get them to the support teams. We'll get them over to Steven and AJ if they have any specific insights. But other than that, I would encourage, let's go ahead and just pull up Steven's site real quick, the Trader's Plan, and invite everybody to those webinars. Hit the follow button, hit the subscribe button. And bring your questions. Other than that, any final parting words from the two gurus in the audience here?
Dude, can I show my screen really quick?
Yeah, let me pull it up here. Okay.
Because we all have mentors, even us folks. Like I've been running Trading Trainers since 2003, but I still have my mentors, and I follow them on Facebook and slide into their DMs and all that. My mentor posted something about last week, and it was awesome. I just wanted to share it with everybody because it's kind of a good sentiment to have, and we kind of brushed on this. He wrote, "I just hate to be the guy that breaks this to you, but most of the self-described experts out there have their heads firmly up their butts. There are shortcuts to success, but none of them involve magic. Shame on you if you get involved in some scheme that you just know sounds too good to be true." And I thought that would be really cool to, because especially in our trading world, man, there are a lot of folks out there that will promise you the world. If the hairs on the back of your neck stick up, if they don't seem like they're actually practicing what they preach, like Steven and I, then you gotta take that with a grain of salt and don't into something that you think is magic. There are shortcuts. There are different things that we can do, especially with what Steven's talking about with doing some planning and all of that stuff. There are shortcuts, but it's not magic. And so I just wanted to check, because that was really timely that John posted that. This was John Carlton. He's a mentor of mine in just the kind of the world life view of things. But I wanted to throw that up for everybody. And that's my parting thought. You got parting thoughts, Steven?
It's hard to follow that, honestly, but that was great, and I completely agree. No pile of magic beans here. I think if I want to tell people, like, right now with the market, kind of being indecisive, one thing I'd like to leave with everybody: if you're unsure what to do, right, because you're not sure which way the wind will blow, it's okay to take a few days off. Right. The most important thing is risk management. The most important thing is you protecting what you've worked so hard for to build your entire life. So if you're unsure, take a breather, take a step back, analyze the markets. Maybe when the markets close on the weekends, create a plan for the next week. You'll do great.
I agree.
And with that, we hope to see everybody in the workshops, the webinars next week. Hit that follow, subscribe, reshare button. Tell your friends, tell your family, and we'll catch everybody next week. Have a good weekend, everyone.
Take care, everyone.
See ya.